So if we look at some of these swing highs, obviously you see consolidation in each of them. There's four to my left minimum, where there's a little bit of a range at the top. I don't necessarily think that means we have to reject here. However, we can just look at stuff like this to kind of determine whether or not it's going to be such an immediate move. Like, it might go up, down a couple times. It doesn't necessarily need to resolve like right this second. It might sweep lower, tap into the daily fair value gap that we just showed. But I mean, it really comes down to where are we going to be positioned at into the open. If there's some sort of reasonable structure that forms where I think it becomes extremely likely that prior day high gets taken, as opposed to it being prior day high or prior day low, then we can potentially look for that continued upside. But I want basically to trade outside of the prior day range because when I'm inside of it, I'm just going to kind of get whipped around. And from that perspective, I just don't want to deal with that. What up? What up? Yellow, yellow. So yeah, again, just kind of looking at these different sweeps, you see to both sides, you can identify, you know, a higher high that got swept or a lower low that got swept. You do have these equal highs. These will be nice at some point, but they don't necessarily need to get ran. And that's something that maybe in the past I would have been a little like headstrong about where it like needed to happen today, but I've just seen too many examples. And the more I look back, I can come up with dozens of examples where this might stay here for a little bit of time. It doesn't need to be here forever. But if it stayed here until maybe the end of the week, perhaps, that could potentially work. And I'll kind of walk you through my framework on that, my thought process. So understand that the right here with some of these levels we're looking at, this is 60-minute gap, but it's the same thing as a 30-minute gap. You have some 30-minute gaps right here, 30-minute gap, 30-minute gap. But then, as we continue to the 15, you're relatively going to get the same thing on the 15. So you see all of these levels are more or less the same. So I'm going to go ahead and refine everything. The 15, yeah, I can leave this one. I'm going to leave this one as the hourly gap because it is a little smaller in this scenario. But, looking at this gap right here, I'll focus on the 15, yeah, and so forth. You do have a nice inversion here, kind of like by itself. I don't necessarily think this is a reason that you need to get into a trade because you got to remember imbalances indicate trend, inversions indicate reversals, but we're in a range. So we understand that, hell, even if we look to our left and our right, we can see plenty of examples. Like we could go and find some inversions that just kind of don't work, but they do. And it's just like we're gonna subject ourselves to that kind of headache for like what? I'd rather focus on something that I'm really certain on. None of this I'm really certain on. I can see the levels, like that's obviously not difficult to do. I think anybody with, eyes can see them, but how do we make an actionable plan? And as it stands right now, we're just going to see a bunch of these levels kind of get colored over. Maybe they hold, maybe they don't. I mean, I guarantee at some point right here, this little inversion, it closed above, right? This one right here. Someone probably thought this was a trade. Breaks above. They're like, yeah, all right, we're going for the highs. Wrong. So it's very likely that we trade lower, or we kind of chop around. So I'm going to just give it time. I'm going to let it digest because we are at the top of the swing. Whether or not we consolidate sideways or reverse is going to be dependent on, whatever the market decides. But right now, I do not have a setup that will yield me anything above a coin flip. I want something more like 80%, 85%, because this drawn liquidity is a really strong, it's a really strong target. So I'm not going to waste on a low quality entry because when I do take a trade up to here, I want to hit it with some decent size, and anything right here, yeah, I don't really have the data or the conviction to support taking a trade in this little range. So if something materializes, maybe I miss it, maybe I don't, whatever. But I'm not committed to taking a trade just yet. So yeah, I got all my levels done. Went through pretty much every time frame, obviously. We went through the daily, 4 hour, hourly, 30, and 15. As you guys saw, a few of the time frames will more often than not be pretty close to similar. That's why I divide it between you have obviously the higher time frame, which is like, bias and drawn liquidity from like the daily or weekly charts, right? But when you get into like the 60 to 15-minute charts, that's what I consider market structure. That's where you're looking for like internal highs, internal lows, all of this stuff right here that we're seeing, like these sequential sweeps. It sweeps higher, sweeps higher. None of this would necessarily be easy to run right now because you got to think any liquidity that was up here, it got swept. Then it went lower. Any liquidity that was right here got swept. And then it went lower. So there's a lot of stop hunts. So this is not an easy trade right here. You see, there's multiple bullish arrays being disrespected. So, not to mention, we also have this gap right here, right? And then also the gap behind it. So there's a lot of layers of bearish arrays above. We'll draw some of those right now as well. So the cool thing is the more that you begin to layer into your analysis, you just start to see why things are kind of doing what they are. And when there's like a bit of a story being told, you see this level kind of holds and then breaks below aggressively, then we run right back up to that area, you know. That alone kind of tells you something. So we'll add some here as well. So look at how we react to the quadrants of this gap. That's a pretty important thing. You see it happen in the beginning, and then you see it happen here again. So this level is significant for us. It's quite significant, in fact. So notice how just we do not have a clear picture. I mean, I guess we actually do. It is a pretty clear picture if I'm being honest. The picture is telling us one thing, that it's not necessarily going to be the easiest trade to get into something right now. Like if you need to make money in the next 10 minutes, good luck. Because I do not have that same desire right now. So we have our new week opening gap. Also this purple level, which was a daily inversion, daily fair value gap below. So we got quite some levels actually. It's just they're all kind of concentrating into this consolidation, so it's not a clear picture. You do not have a strong directional bias in this scenario. You might think you have a strong directional bias, but there's just too much on either side, and I don't have any sort of hint as to whether it's going to go higher or lower. But I do obviously know which, like, there's expected distances it can move. It's not going to go to, like, outside of the normal. I'm just saying we don't know exactly where it wants to go. When you look at, like, if my playbook, for instance, I like to trade a lot of opening drives, meaning I'm in at the open, and right in this scenario, I don't necessarily have a high conviction setup to get in at the open. So based on my experience and what I like to trade, I would call this low probability, given that I do not have, like, I'm not willing to buy the open here or sell the open for either matter. But again, yeah, inversion holds the quarter mark. All these different quadrants you see right here, the last little quadrant test. Boom, boom, boom. Little imbalance right here. So yeah, you do have quite a few bearish arrays. I'm gonna kind of just leave this up right here for you guys to look at. And then, if you have any questions, let me know. This is just my analytical process on how I look at price. It should be pretty similar to whatever you guys are doing. Just because I'm just going from the top down. I mean, it doesn't matter if you're looking at fucking moving averages or whatever. It's all the same thing. It's all the same thing. This just, in my opinion, works a lot better. But yeah. A daily chart right now. Yeah, 22,000 could be a decent area for maybe Wednesday's low, and then Thursday, Friday we expand higher. That could very well work. It could be a bearish day. It could potentially hold in this range too, then overnight gap lower or something. So I don't necessarily have a clear cut picture. I'm not going to say, oh yeah, let's just short it here. That would be your prerogative. I don't think I'm gonna do anything on this day. There's easier days than this for sure. And if you could do one thing for your P&L at the end of the week, end of the month, you always want to be thinking, how can I reduce losses that are avoidable? Because that in turn influences your profit factor. And the higher the profit factor you have, the more risk you can take. Because it means you're more likely that you're going to win, and it's going to take you less losses to do so. So, yeah, with that being said, I think anything today will yield avoidable losses more than anything. I think the losses that you incur today would be largely avoidable. I don't think there's a huge opportunity cost to doing very little today. Now, if you ask the ultra hyper scalpers stuck on the 1 minute, or anybody who needs to take 30 trades a day and for the life of them can't limit their ability to just turn a trade limit on, then to you it might seem like, there's a lot of opportunity. I don't think there's sustained price directions or price movement ahead. So for me, I'm good on that. I'd rather just stick to a reliable system that is supported by data and kind of go from there. And for me, I definitely have the data to tell you that inside days are historically going to be trash. They're not going to be great. 9.99 times out of 10. Yeah, I've never met an inside day that I liked. I'm going to be honest with you. So that's when the daily candle is within the prior day range. especially when it's a narrow bodied candle, because it was indecisive. And when it has longer wicks, well, I mean, that's giving you everything you need to know. So with this, obviously on top step, the candle's kind of broken because of the holiday, but normal day to feed, it's just one candle. So we're in the prior day range. We got 3 minutes till the open. I mean, you can see it. You see there's like these opposite candles. And now we're closed below it. You see there's this right here, this gap. So you can see all these levels. We got 2 minutes, so we'll either slightly invert. Maybe you do run some of this stuff. I'm gonna just sit out. Maybe I'll wait for a continuation after 10 if I do anything, but I'm not inclined to do much today. We'll just sit here on the 15 and watch this. All right, so who's going full port at the open? Anyone? Or who's already taken a trade and how's everything went so far? We got 1 minute. Give me a rundown on what you've experienced with price. Because from what I see, all we had was the Asia opening drive. So this is a really easy trade. I know a lot of people are like, oh, I don't trade Asia, but look, when you open right here, you see the new day open, boom, gaps up, initial momentum drives to this imbalance, which ends up being the high of the night. Weird. But you see how it only went up from that point? That's an easy trade. None of this shit is an easy trade. Yeah, it's usually best to kind of wait until, your little 10 a.m. 10 a.m. reversal, 10 a.m. continuation type. That's usually it. Yeah, but inside day, I'm just gonna let it rock. You can tell I'm not really interested in trading when I'm on a 15-minute chart. So we've experienced now, if you look at the 15-minute chart, it's been 4 candles of sideways action. So anyone on a 1-minute chart is just getting whipped around in like a 20-point range. When you're inside a prior day range, it's best to kind of play defense. The same thing applies for prior day weeks, to be honest, but obviously there ain't shit we can really do with the weekly chart we've experienced. So yeah, I'll throw the levels on again. So some initial movement lower, but it doesn't necessarily mean it's going to close lower. Maybe you find a trade in here, maybe you don't. I personally am interested in kind of just chilling today. I'll focus my efforts when we get to that daily fair value gap, to be honest. We get to the daily fair value gap next couple days. That's when I'll really wanna be trading. Um, just because we don't have structure on the daily. You know, you look at 2024 markets, there's a lot of instances where you can get these really easy trades versus a daily fair value gap. We haven't had really anything this year so far. So there you go. Little 1 minute inversion, but you see how it's like wicking. I don't have confidence that it needs to close lower, this or that. So for me, I don't need to take this trade. If someone needs to take this trade, then go for it. I'd rather just save the potential loss and focus on something easier. No real news inside prior day range. Like everything is yellow folder, so it doesn't really matter too much. You got some Fed speakers, and then also you have FOMC minutes in the afternoon. So perhaps in the afternoon, we'll come back and look at something. So I think that's even more reason for me to kind of save my bullets because even though FOMC minutes isn't really that important, it's still high impact. It's still red folder. So yeah, with that being said, maybe if we get below some sort of, some of these swings down there, maybe in the PM I'll look for something. But yeah, nothing's out of reach because mind you, we're trading 80s right now, 180. The daily fair value gap is 140 points lower. We can have 140 point candles on NQ. So it's not out of reach. So if we get down there, like what I'll do actually is I'm gonna go set an alert at this level. Yeah, 42.50. Here's your 1 minute chart. As you can see, inversion, and then what are we doing now? We're tapping into somewhat of the balanced price range. Whether that holds or not is, I mean, I don't really have an answer. I don't need this to go either direction right now. We're just consolidating, so that's why I'm not saying like, oh wow, I think this is a great entry. I don't think anything here is great by definition. Regardless if you make money, there's some price action that's better than others. Yeah, I mean, you definitely have structure you can look at. I would say that this appears to be the opposite candles. I don't think that this needs to be resistance, but I also don't think it needs to break. I just think it's going to kind of just dance around. Like, look at all these wicks. These are people's feelings that are getting hurt right here. You know, this inversion might hold now after sweeping. Maybe we run these highs, but to me, it's an easier trade until I get something really, really, really obvious on the low time frame. I'm not gonna target anything. I don't really want to be in the range, to be honest. So I'm just not gonna really do much. So you gotta think what happened here. Wow, fair value gap off the open. Someone gets long, destroyed. Okay, someone gets short on this, destroyed. Somebody gets short in this little balance price range, destroyed again. It's going over both sides of gaps. On a 1 minute, obviously, it doesn't mean shit. But it just goes to show you that being eager when the conditions are not clear is like that's just how you lose. Trading isn't about just winning, it's about not losing. It's about not taking stupid trades. So just because it's up here doesn't mean it has to stay up here. Just because it's down there doesn't mean it has to stay down there. We're talking like 40 points. Like this isn't really a big range. So this can easily just come back down. Like, you see this gap right here. Does this have to hold? It doesn't have to do anything right now. Could it hold? Maybe. But that's your prerogative. I don't like operating on maybe. You have this inversion right here. You have levels up here, but yeah. I mean, it's not a terrible signal looking at this as a change in state. I don't think that's terrible. But I also think it needs to kind of go lower for the weekly profile. So yeah, that's why you don't want to get too bought into the lower time frames because I mean, really, this can fail too. See, like the 5 minute is like whatever. 15 still kind of dancing around. Yeah, your 60-minute gap, but again, these wicks, 71 or 73 to 203, it's bigger than a lot of your guys' stops. So it's not really a structure to kind of mess around with. And once again, back into this gap, and we'll see if it kind of colors down. And this kind of tells you, like, when you see a raise flipped around, up, down, it might not be the best condition to get involved. It might be waiting for the afternoon. Maybe it needs to wait for tomorrow. But yeah, this doesn't look strong to me. This right here, I feel like if I'm in this trade right here, I don't feel comfortable with this candle. I think it's gonna stop me out. I'm like, shit, why'd I get in this? So easier just to watch it and kind of envision what are other traders experiencing during this time. Because if you can kind of see, panic on the charts or whatever, or understand where your shortcomings might be on the charts, it helps you avoid this shit for next time, honestly. Like you see this open, you now have 3, 4 fair value gaps that have just been kind of flipped around either direction. Um, Somebody out there, maybe someone even in this call is like, you know what? I don't care about any of the higher time frame bullshit. I'm gonna take this fucking trade. And now they're like, they flip biases 3 times and then they're down $500 on the day because they can't listen to me say over and over that it's low probability today. This is not an easy day to trade. There's no directional bias. Why would I want to bet on a market going in a direction if there's no directional bias? It's kind of common sense, but people let their emotions decide for them, and that's where they mess up. Much easier to do nothing. Right? It doesn't look bad on the 1 minute. Like that's the problem. People love the 1 minute. I do. I love the 1 minute, but I know it ain't gonna work just based on the daily alone. Like this shit, it doesn't matter if it goes up or down because it kind of colors outside the lines. There's no way you could structure risk for it to work to your benefit. Unless you're just hate trading like the hourly gap below. But again, you're talking only a 50-point stop. So I'd rather just chill. Whenever it's like folding like this, I call it this is like fold. Is that's not my type of trading. I don't want to be in this. Like, does this really look good to you? Even though there's a fair value gap, there's a couple. Does this really look good when we kind of just sit here and look at it? It's very sideways. It's back and forth. We're getting, let's look at the 5 minute, kind of get a comparison. Yeah, this is not a trade you really want to be in. Like, wick, which way? Which wick is going to get ran? Yeah, see, it's just not good. Yeah. So, I mean, ultimately, you learn this stuff through experience. So then that's the cool thing is it gives you something in a journal. You take a loss, whatever, you say, oh fuck, why did I take that? I can tell you I've taken, dozens of these trades. That's why I'm so confident in telling you it's gonna fucking not work. It's just not gonna be the day. If you traded anything in the last 10 minutes, you've lost money. Unless you got some stupid trade that doesn't even make sense in terms of risk reward, just to be like, oh, see, I made money. It's like, no, this is just not high probability trading. Do this 100 times, you will not be consistent with it. It's just not a reliable time right now based on all of the data we've given. Based on all of this, nothing tells me to get long. Nothing tells me to buy. Like, it's all good. I mean, that's gonna that's gonna be a common trait for people. If they don't listen, they get wrecked. Especially when I have like a strong thesis on what I'm saying. It's an inside day. I've been saying this for the last like hour pretty much. Inside days suck. The open's gonna suck. I'm more than likely not gonna trade. We have FOMC in the afternoon, the minutes. Um, but yeah, what's the damage, Drew? Yeah, it's just I mean that's $400, dude. That's good risk, you know? What's stopping you from taking $100 or even fucking $30 of risk on this? Do you really need to risk 400? How confident were you? You told me too. You told me. You're like, this is probably gonna chop. You agreed. That's it. It's all good though. Too many trades gotcha. Yeah, happens. Yeah, I mean, it deceived you, right? You guys thought it was said one thing, it didn't say anything. But hey, it's no harm, no foul, right? Like at the end of the day, no one's blowing. I mean, no one that said anything is blowing an account. So um, all I can do is lend you my experience. I can tell you that I will not trade this because of how many times that I will lose on a day like this. I won't do it. I will not. It's a no. And for you, you're gonna have to find out what your points are because there's some guys in here that'll be like, oh no, that makes sense. I can understand what he's saying. I'm not gonna do it either. Those guys are chilling. But the majority, like they will have to take these losses because they don't understand what I'm saying when I say it. You will lose on a day like this. It's an inside day. There's no direction. If you do not have a directional bias, how the fuck are you going to know where it's going to go? It's not going to go up or down direct in some sort of clear fashion. So when that happens, I'm going to avoid it because, like I said, I think my higher time frame level is below us. I said that in my daily game plan. I said that I think that we could potentially reach for there. But again, that doesn't mean I want to short it. The only thing I want to do is not get chopped up right here because losses affect my profit factor. And if I want to be able to increase risk, I have to increase profit factor because that means based on the trades I'm taking, I'm making more money relative to the amount of money I'm risking. So that prevents me from going into severe drawdown. So that's what my prerogative is. That's what my goal for today is avoid losses. I'll give you a little blueprint right here. So depending on the type of day you're in, it could be an easy money day. Today is not an easy money day, I promise you. I promise you, any money you make today will you have to fight for your life for. And that's not good trading. Good trading is supposed to be effortless, meaning it doesn't mean, oh, you're not a hard worker. No, it means you don't want to incur losses along the way that are not needed. So if it's really hard, if the conditions are really unclear, and especially if you're like in a super tight scalp, like 15-point stop, like I know Drew uses, less than a 20-point stop a lot of times. This is not the time for it because the structure will get swept back and forth. But if you're someone like, Mike, you know, MC Mike, he'll short this or whatever, have a stop here and just let it work all day. a little different. You can trade pretty much any day because eventually this is going lower. And for him, it's just whatever, to take some time. But yeah, if you use like a very, very tight structure, it is what it is. Maybe Steve, you can see the smaller structures, so those stops kind of get ran in these conditions. But we largely respect the 15-minute. Do you not? I mean, we see it. These are levels I gave you guys like an hour ago. You have the 15 inversion, you have the 15 bearish fair value gap. This now you have a 15-minute additional inversion with this closure. But yeah, these are not easy conditions. We'll go ahead and look at the matrix that we call the 1 minute right now, but I doubt it looks good at all. Yeah, I'm good. I'll pass. This is enough for me to close my laptop. See, Teddy's got on point. Besides inverse fair value gaps, what else can you tell me about the structure? Yeah, it I would say like dog shit, honestly. It's a little bit of discipline, but honestly, man, I really don't want to take a loss I don't need to. It's not that I'm afraid. I just don't want to waste risk. It's just, to me, it's pointless. I can easily have a no trade day because I know that on a day that I try to force something, I'll just have a red day. And then that red day is going to take away from the profits that I'll make tomorrow or even in the afternoon. So it's just like, it's just weighing it out, pros and cons. Yeah, no, I get it. And no clear price action target. So yeah, no target. I just don't want you to be obsessed with like the smaller time frame because yeah, invert, dude. Fair. There's not just It's not just inverse fair value gaps that are failing. It's fair value gaps, order blocks. The only thing being respected is your 15-minute structure, but 1 minute structure is not being respected. We're inside a the day and prior day range. It's a doji, so there's just no clear directional bias. Boom. Well, lower, but not a trade I want to take. Your first inversion, somebody took this, got stopped out, and then it works. That's annoying. I don't want to do that. That would be something like you have to think, if I don't want to trade this day, how would I have traded it? If I did trade it, maybe I took this inversion because this looks pretty clean and my bias is lower. Yes. This would stop me out. Then what? Do I take this inversion and then risk it happening happening again? So it's just like it's there's not enough juice for the squeeze. It's not worth it. At least for me. It's not worth it for me. Yep. Yep. So you got all this structure here. Teddy, you see this? You have literally from top down, it's super, super clear. It's super defined structure, but it's nothing that I want to personally trade. I do not have any inclination to trade this. Perhaps you take one short in here, have a stop up there. Maybe. I don't want to do that. That was literally the only thing I was thinking about really today. This was like the first level I was looking at. This one right here, this little purple, I'm sorry, this maroon level, coupled with this. Then I started laying out the rest of it, but I just don't want to. I don't want this to be like, closes a wick, shoot up here. I don't want to do anything like this. But ideally, for me to get involved, I really want this level down here. I really do. I think I've traded. I'll check my calendar right now. Yeah, I've only missed one day of trading so far this month. So if I don't take a trade today, I'm fine. It means that I'm showing up for the majority of opportunity, and then a day like this, I just don't see anything, so I'll just gladly kind of sit out. But now we're getting to that macro. You got 950 to 1010. Maybe you get a trade like that. For me, no, I'm done. I will not take a trade for the AM at all. Yeah. If anyone has questions, just throw them in the chat because obviously I'm not monitoring a trade, so I can answer whatever you guys got. Yeah, none of the time frames look great. I'm gonna post a picture in the main chat. Just look at my bigger screen. I don't really see much I like up there. So again, you see this like forming as like a hammer. So again, like that's kind of what I'm getting at. The short was not sustained. Maybe I don't even think this would be a target for me because if I'm in here, I doubt I would target this. I'd be holding for something down here, maybe 100. So even if I'm in this trade, it's like coming back to break even. This would not be fun. So it's just easier to avoid. But yeah, we'll see what it does into 10 a.m. Then hop off shortly after 10 a.m. Hopefully, this kind of gives you guys an insight on how I'm looking at price. You lose on enough of these days, and you just don't want to do it no more. Is there money to be made? Maybe it's just not for me.